Yeah, we've seen a continuation for a number of years since the crisis, this sort of gently declining headline level of global unemployment. Stabilised this year, so the fall off has basically gone flat on us. We say it's expected to stay the same next year, but there's so much uncertainty, you've been talking about it, about what's going to happen, that I think any prediction is somewhat hazardous.
But a lot of that uncertainty has been resolved, hasn't it? China and the United States have managed to get eye to eye on progress on a trade deal. Brexit now, we now have a pathway for this. Lots of these issues that dominated 2019 have started to be put to bed.
Well, I guess there's some positive developments. I wouldn't hold my breath on the end to the age of uncertainty, but even if there were, and you're relatively optimistic sort of take on that.
I'm just poking you, really, to get a reaction.
Well, I'll be poked. I'll say, even that were the case, there's an awful lot of other things going on in the world of work. I mean, transitional change through technologies, on climate change action, demographics, which we don't talk enough about. But even if policymakers were to get their act together a little bit better, you've still got a lot of things that are creating uncertainty.
Guy, good morning to you. Climate could actually be a fantastic bonus for retraining and retooling a whole population, so I'm quite excited about that. But what I'm interested from our viewers' point of view is, if as wages start picking up on the back of that stabilisation, then our viewers want to know that if interest rates are going to go up and we're going to see some movement there as well. Are wages, is there any sign that the Phillips curve is working? Are wages improving?
No. Now, this is an interesting thing. Wages have remained sticky in a sort of a downward direction. You would think you would see tighter labour markets generating greater increases in wages. And there's a big story out there about how wage determination takes place. Collective bargaining is in the decline. Minimum wage policies are being used much more around the world and quite effectively. They tend to hold things up at the bottom end of the labour market, but it's not filtering through to the type of wage increases that you might expect to see. But can I just add one more point to this headline figure of unemployment? In our report that we just put out, we tried to sort of look a little bit wider and look at other elements of the labour market which are indicators of underperformance. Underemployment, the number of people who are simply, they are in work, but they're not working enough, nowhere near enough. And secondly, what we call the potential workforce, discouraged workers, workers who are sort of on the fringes of the labour market, half looking but half not.
So this doesn't make sense to me.
And that takes you to 13%.
You've got tightness in certain labour markets, but underemployment at the same time. Why?
Well, I mean, we're covering a global labour market here.
OK, well, can we just concentrate, I mean, let's say on the Western market, the United States, for instance.
OK. Well, one thing is the discouraged workforce, and we shouldn't forget about that. But there are a lot of people being crowded in to short-time contracts. We won't go to the zero-hour contract story.
It's ambiguous, because a lot of people like 0 hours.
Well, that's the difference between voluntary and involuntary. And when I talk about underemployment, it's by reference to what people would want to work.
Sure.
And the other element of all of this is the working poor. So 1 in 5 people in work today is still in poverty. They're working, but they're still in poverty. In a global workforce, 61% are in informal employment. Now, this is the wider picture, I understand. You want to look at the high end of things. At the high end, something interesting is happening. We're seeing a growth in self-employment in its different forms. Very difficult to catch in labour market analysis. But one thing our report shows is that what we call the dividend to self-employment, that is to say, that sort of advantage in terms of income that the self-employed have over the salaried workforce is getting compressed.
Right.
That dividend is getting compressed. I think we need to look a little bit more at why that is the case and what it means. I think it means that some people are being squeezed into self-employed status as a sort of a survival mechanism in the labour market. It's not the sort of the image one might have of self-employment as a positive entrepreneurial choice. And added to that, the labour share of global income is still on the decline. 51% was 54%.
Doesn't quite tally with the stakeholder capitalism.